Good afternoon, traders, and welcome back to the weekly stocks outlook for June 18th, 2018. Hope you all had a great weekend and, of course, are ready to begin some trading for the week. Now, I want to spend a little bit more time. We'll go over the larger side of the market, the indices, crude oil, the dollar index, a lot of important things going on there. And I think really the most important thing, of course, as far as you're trading in the stock market throughout the week is really identifying your trade setups, really set up a process, which we spend a lot of time in our Tuesday and Friday session focusing on. So we'll go over some markets that have come through the scan from last night, but some very important themes I think will be important to just sort of keep your eye on as the markets trade over the next few weeks. Now, the S&P 500 and the NASDAQ here, they are in uptrends, and we want to be paying attention to things like the dollar index and certainly the crude oil market. Those markets will affect stocks, but we don't want to get too wrapped up in trying to predict how big market correlations are going to play out. So when there's a lot of strength in the dollar, that doesn't necessarily mean it will be bad for stocks or certain commodities. We really need to have that process in place, which will help us manage whatever the situation that comes through and really take advantage of the current market participants in a given market or a given stock. So when we look at the NASDAQ and S&P 500, the trends are up here. We are getting a little bit of divergence from the market accumulation index. Sentiment's been bearish for quite a while here, but trend is still up. Neural index is still very strong here on the NASDAQ, and there's no reason to really go against those signals from VantagePoint. They work quite well at keeping us on the right side of the market, and when we do get some weakness, should it come, VantagePoint will be on top of that and let us know, okay, now let's go ahead and start shorting the market if it comes to that. The S&P 500, a little bit different here, but we got a recent bearish PSI signal. And we see that weakness has, had a little bit of effect on the market. That coming through about, Thursday or Wednesday. Getting this, level here where your PSI drops below the 20 level. And we did dip a little bit lower, but the trend is still very strong here. If you actually look at, this is I believe our longer term predicted moving average here. Very, very a good amount of distance to the upside here. Medium-term moving average is still bullish there as well. And our short-term really just hanging right on top of the actual moving average. Now, if we look at this candle on Friday, we traded lower, traded right back higher, really to that really PSI level. So the close on Thursday being that level where, we may have some difficult time above 27.88. We certainly did dip lower, but we really don't have trend in our favor to the short side to really justify, actually really looking to short the market. If we look at the triple crossover here, we get more of a context, and we're reverting back to really where we thought we would. The triple crossover level on the long-term predicted moving average on the triple cross, we've come back. We get some support at that level. So we'll see how things come through in the first part of this week, but no signs yet to really say, look to be aggressively shorting stocks, and therefore if the indices aren't weak, you should probably be looking to find areas of the market where you can actually take long positions. If we look at crude oil, and this has really been the biggest theme I'd say in the market is, we've really talked at length in our sessions about this, you can call it a top, I guess, but this level right above 71, I think it's 71.33, 71.31 is where all of those levels came through as far as market accumulation starting to divert, PSI bearish, and it made no sense to be long above these levels, and we therefore want to use our VantagePoint tools to guide us on how to get short and when to get short. So if we look at some of these indicators last week, really the markets did almost exactly what you'd expect them to. We really watched this going into Friday morning all through the session. And if we bring up the triple here, you'll see exactly what we mean here by this was very expected, that we've caught the bigger move lower. Our PSI got bullish, so we're sort of in retracement zone where we had just day after day just sort of grinding higher and grinding higher. But look at market accumulation. It's warning you that the bigger move is still to the downside. And so we got right up to this triple crossover level and completely failed. And so now when we look at these charts and say, okay, well, where's crude oil likely to go throughout the week? Well, we still have room to go lower. There's a lot of divergence here. We haven't broken the lows here yet. We've sort of retested the idea here is that we're going to move lower, find that resistance at the triple, and then resume trend to the downside. So all throughout the stock market, when we run those scans, all those crossovers to the downside from the last couple of days have many of them been throughout the oil and gas and energy space there. So it's not too difficult to see what's going on here. We've got a strong dollar, weak commodities, and that even that weakness in something like crude oil can be very bullish for a lot of stocks. So not really playing into the stock areas outside of the energy stocks, which had done extremely well over the last few months, but then that narrative change actually makes sense to go ahead and short. So really, really great signals here. This is exactly what we want to see. And whether you're trading stocks or commodities or what have you, when all of these conditions line up exactly like they have on crude oil, you know that you have a longer term move really setting up. And until that narrative is broken somehow with, market accumulation then moving above price or your moving averages getting very bullish, there's no reason to really expect crude to do well. This is just, in my view, it's just a continuation of this bearishness is what we're likely to see. And this triple crossover is going to turn into that resistance that we generally expect to see in these sort of situations. We can look at the dollar index and just another example of how this works, right? So, if we bring up our triple crossover, we had almost exactly what happened to crude happen in gold a while ago. We were having this divergence here, right? This retracement here where price is sort of recovering after a down move. Very similar looking PSI signal over that time period. But the market accumulation index is telling you, look, the move's to the downside. You don't want to be long here. And we caught that resistance, move lower. And then recently, again, with all that strength in the dollar, gold sort of recovers, but right at that triple crossover level, starts moving lower once again. So, until we see some of these conditions change, it just doesn't make sense to be trying to get, aggressively long really commodities, energy stocks, certainly not, crude oil. And that really all has to do with the dollar index. So again, we can bring up our triple crossover here to get more of that longer term view of what's going on here. But the dollar index, for quite a while, the mode has been don't short dollars. There's no reason to be shorting the dollar index. When we caught this big rally higher, we did start to notice divergence. The problem here is that there's no perfect level to short from, right? It's not like crude oil where, both distribution and we had a bearish sentiment signal. We can sort of put that line in the sand and look to trade from there. In the case of the dollar index, we get a little bit of divergence, but we're still really at highs. If we zoom this out to something like a year-long chart here, you see the accumulation has come in over this time period over the last few months. We've sort of just dipped back lower with price here, but we're still at very elevated levels as far as accumulation here. So my opinion here is that we may be in the last throes of the uptrend here, where generally we actually get really strong rallies during this time period. So I'm not going to be surprised if we see some very strong rallies out of the dollar. You see crude oil going lower. Gold obviously started to just push drastically lower here. And what we may have happen is even a few weeks, maybe even a month here where gold or the dollar index rather trends higher. And if market accumulation can remain going lower, so as this market price goes higher, market accumulation goes lower, we may get to a situation where the PSI goes negative, and then that would be a great opportunity to reverse these sort of trades or reverse this mode that you're in of, shorting crude, shorting gold, shorting foreign currencies, shorting crude oil stocks. That's a lot of opportunities there. We from this sort of interpretation, we know the direction of those markets, and that can get very strong during these time periods. So until we get a bearish setup on the dollar, which you can see would take a while, we would need a very strong uptrend and a lot of conditions to line up for a bearish trade. But until that happens, you know what direction all these markets should be headed in. Commodities are going to be under pressure, foreign currencies under pressure, and energy stocks are going to go in line with crude oil. So I do have a sneaking suspicion, though, is that the markets can still be very strong in an environment like this. Sometimes you get different correlations where it's not just dollar versus everything else, but it's dollar denominated assets. So money is moving into not only U.S. currencies, but also U.S. stocks and U.S. assets. And that can speak a lot to what's going on in the globe, but that sort of gets into politics in these areas that we don't need to be too concerned about. But the important thing is that having a process and a way to interpret this data will keep you on the right side of these things. We'll make it so that you can take action on the market when it's necessary, but don't get too drawn into trying to figure out what those intermarket correlations are yourself. That's really the beauty of the software here, is it's doing all of that analysis for us so that while the dollar's rallying higher here, we can still be getting long stocks, which have performed very, very well over the last few weeks. So, should that continue? Of course, we'll see, but there's, like I said, I mean, just because the dollar's strong doesn't necessarily mean certain markets are going to be weak or vice versa. So just keep an eye on these things. Now, if we look at individual stocks, let me go ahead and I'll bring up my market tree here. We have some things that have come through the scan, and a lot of these are actually, simply related to crude oil and energy. And we've seen, by running these scans, some of these opportunities come through in line with the weakness in crude oil. But there are still some areas of the market where I think there's some opportunity to actually go ahead and get long here. So let's go ahead. We'll start from the bottom and work our way higher here. But going to keep a close eye here on Wabash here. We've got our long-term predicted moving average holding there, some accumulation there as the market accumulation index. PSI is bullish, so you've got a level here right around 20, and that may be a good market as far as trying to buy at predicted lows as long as those predicted moving averages hold there. Stanley Black and Decker, we've got a lot of accumulation coming through. PSI bullish. We are trending lower here, but this is something I want on the radar to pay attention to. If we can get trend working in our favor, certainly an area of the market where there may be some decent opportunities there. We can go through some of the energy stuff here. So you see Plains All American, nice rally higher here recently, but market accumulation dipping lower, PSI bearish. And now some of your crossovers coming through to the bearish side. This would certainly be an area of the market where I would look to take short opportunities. So if you get some levels lining up as far as your time frame that you're working with, certainly go ahead and you'd want to be short some of these energy stocks, which what we're seeing in commodities and crude oil, we're certainly way heavy on these areas. We can see it in Anadarko Petroleum. Same thing here, where if we want to pinpoint a specific sort of top here, it's right here on that first green candle higher. No sense in really being long Anadarko above $70.50. We see we get a little bit of an up move here, but we're not running to new highs, and now the crossover to the downside in line with crude oil and these other markets. So definitely likely to see some continued weakness here in some of these bigger energy names. Hess is another company, Exxon, some of these bigger names lining up exactly like you see it in the crude oil space. And, they've sort of have a double sort of whammy here, right? They've performed really well over the past few months. A lot of investors have really, gone in there. We've been trading some of that to the upside. But now as energy prices start to fall, and if crude oil keeps trending lower, not only will a lot of this money maybe scurry out of the way from wanting to take profits over the last few months, but also get that bearish sort of conditions from the commodity market as well. So this is a big area of the market. A lot of basic material stocks, a lot of energy stocks. And this would be the area where I want to look for opportunities to actually go ahead and short the market if you want to take short positions. Conoco here, for weeks now, this has been fairly clear here that you do not want to be getting long these sort of companies. So you see you run up to these fresh new highs, just like that other chart with Anadarko, but this is what's warning you. There's a lot of danger here in going along some of these names. So here in Conoco, we've got a bullish PSI signal, so you may get a little bit of a bounce here coming into the week, but the bigger moves to the downside, and that would suggest trades to the short side, options, what have you, trying to short at some higher prices if you get a little bit of support coming in the early part of this week in some of these oil stocks. If we look at a couple of companies that I'm interested to continue taking long positions on here, we talked about this during the week of Hershey. Really have all of our conditions lining up right here. On this candle right here, we see the close of that was $90.50. So I actually had an order waiting here right down at $90.50, and you see what happened towards the middle of last week. We came back lower, retest 90.50. We don't break the range. The reversal looks to be taking hold. Our predicted moving averages hold as well, and now breaking higher in line with that accumulation. So not a bad area of the market to see some strength coming in. We've got Hershey, and lastly here we've got Goodyear Tire, which I don't have up here, do I? Goodyear Tire. So this has been a market really been in and out of for the last few months here. There's a couple of failures here on the chart where we look to be getting signals, but went ahead and stepped aside as things started to become bearish here. If we bring up our long-term predicted moving average, we're still holding here. We got a little bit of weakness towards the end of last week. But what I really like about this situation here is we've got this level here, first off, at, let's see, 24.57. So that's actually where my first entry is down at 24.57. We sort of came back and got close to testing that on Friday and immediately started bouncing higher. So that's a fairly good signal. Also on this move lower, market accumulation kept moving higher and higher, and we can obviously have very long-term accumulation signal there. So that's really what I'm looking at towards the beginning of this week is Hershey, Goodyear Tire here. There's a couple of other areas that, like we've pointed out, but most importantly will be, of course, running that scan throughout the week that we cover on the Tuesday and Friday sessions, identifying these areas of the market where we see these conditions building. So, one of the great things about running the scans is you're having these markets, especially, crude oil is a perfect example right now of, for the past several weeks, you've seen these conditions on not only the crude oil space, but also these energy stocks. So even when this crossover comes to the downside back here in Anadarko, and then to the upside here, that's two opportunities where this market is coming on your radar several weeks ago. And when you look at these charts and say, okay, is this a trade for me? Well, you can see that the bigger conditions suggest that, look, if you want to trade here, it's got to be to the short side. The conditions are lining up for a bigger move to the downside, and therefore you can really be prepared to make some of those trades and go ahead and short some of these markets and make some money, as crude oil was down almost 3% on Friday. So it really is setting up this process for yourself, because even when there's crossovers coming through that you may not be looking to maybe trade, they don't fit your criteria. You can see your short-term cross, here, that's 4 or 5 times in the last few weeks that Anadarko is going to come on your radar. You're going to take a quick peek at the chart and realize that Anadarko, along with all these other energy names, have been looking quite weak as far as accumulation and your sentiment signals. So that's what allows you to really be prepared, understand these broader narratives that are happening in the market, so that you can not only focus on a sector or area of the market that's weak, but then go in and target that individual stock that you want to trade, where all the conditions are perfect and your predicted moving averages are lining up, and you're getting those short-term signals from VantagePoint as well. So with all that said, this once again has been our weekly stocks outlook for the week of June 18th, 2018. Look forward to seeing you all in the live training rooms on Tuesday and Thursday from 9 to 11 a.m. And best of luck to all you guys out there in the markets. Thanks again, and bye for now.